Hello and welcome to the Business and Banking Dialogue Show, your daily one-stop show for the best of topics in the financial world and subject matter experts. We are live across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. Welcome to this week's shows starting today, Monday, and I hope you all had a good weekend uh, in the last. I'm KK, your host and moderator for today's show. You can view our earlier shows in www.electronicpay.in in the Business and Banking Dialogue page. You can also view our current and previous shows in YouTube. And when you do that, please don't forget to give your thumbs up in the YouTube section, the like section. Uh, as you know, we have been bringing this show every day at 3 o'clock. But from tomorrow onwards, that is the 1st of September, we plan to change the time from 3 to 6. Okay, with this we have been talking about it in the last week also. This is primarily to meet the convenience of our audience who have started working from office with a gradual easing of the lockdown. And so people have started attending offices and they are not able to see our show, which is made live on 3 o'clock. So 6 o'clock seems to be a good time. They feel that they can watch our show either at home or on their way from office to home. So you're trying to accommodate their request. So we'll see how that works. So look forward to seeing you from tomorrow onwards at 6 p.m. We come to today's topic. Ladies and gentlemen, just as the economy was starting to look up at the beginning of this year, the rising tide wave gave to COVID-19 shock, right? We were just about recovering in the early January of 2020. The global economy is facing the most unprecedented shock in the post-war history. The shock is truly different this time around. One key difference compared to the earlier episodes where we had problems is that the fear and scare factor among citizens was not prevalent in the earlier times of recession. There was no such thing as a fear and scare. Everybody's really scared of their life, in fact. The COVID-19 shock has this unique feature, which is response to the shock itself. That is, the virus control and social distancing measures represent a physical constraint on our economic activity. That is unparalleled. The lockdowns and rising public anxiety about the virus led to sharp deterioration in economic activity in India. As you know, the lockdowns have prevented so many business commercial offices from operating. Even today, as we speak, it is not yet normal. We have so many offices still closed. For economic revival, one important and critical institution are the banks and the Reserve Bank of India, which governs these banks. How important are these institutions for economic recovery is a topic of the day. And to discuss about it, we have a new subject matter expert for you, Mr. Mohan Tanksale. Mr. Tanksale, I'll give you a brief about him before we start discussing. You will see in front of you his profile. Mr. Tanksale is a career banker with over 4 decades in Indian banking industry and has led 3 major Indian public sector banks in this span of period. During his illustrious career, Mr. Tanksale has contributed in every area of banking. He retired as chairman from one of the top 10 banks in India, that is the Central Bank of India. He has served as a CEO of the IBA, during which he successfully represented the entire banking industry. Mr. Tanksale is presently engaged as an advisor to Swift India, providing support to adoption of high-quality financial messaging services in India. He is also serving as independent board members in various companies, member of governing council to several committees, and mentoring to a few organizations. So I think the last I would like to say is that he has been conferred with several awards, including the Golden Peacock HR Excellence Award in 2012, Person of the Year for his contribution to financial inclusion by Scotch Foundation. So I had the opportunity of meeting Sir when I was with TCS on the financial inclusion. and he was a great support to us. Thank you very much, sir. Good afternoon and welcome to the show, Mr. Tanksale.
Good afternoon. Thank you very much. I must highly appreciate the initiatives of the EPS, getting practitioners on the screen so that the economy or the industry should not be driven by perception, but the reality should be known to the audience. Thanks and good afternoon to all the viewers and participants.
Thank you, sir. Welcome, sir, and thanks for telling us that. It's a privilege to have you. Sir, let's get into the discussion. Banks can play a meaningful role during the crisis in two fundamental ways, according to me. Of course, there could be many other ways. Leave it to you. Lending money to companies in distress and recognizing that some companies simply cannot survive. So during such a crisis, what should the banks do? What are your thoughts, sir?
Let me at the outset tell that it is said and it is true that banking is a lifeline of the economy. And having said lifeline of the economy, I think the bank should be seen in its perspective that the way it has contributed substantially to the growth of the economy. Why I thought it is necessary to make a little prelude. When I joined the bank in 74, my bank, Union Bank of India, was less than 1,000 crore. Total business.
Yeah.
And today, even pre-consolidation, it is 7 lakh crores. The growth of the banking industry has been phenomenal in the era of 2000, when in 2007 we were hardly about 29-30 lakh crores, where therefrom we have come to almost 100 lakh crores. I mean, that kind of phenomenal contribution has come from the banking industry. When it comes to the support, you rightly said, I totally believe that banking is not lending. Banking is partnering an enterprise in its growth cycle. Not only growth cycle, but also try to understand the various problems with the enterprise faces around it. And thus, I always believe that I am not a lender, but I'm a partner because I lend 75%. And when I lend 75%, I must know the project well, I must know the industry well, I know what are the implications, external, internal. And thus, in today's situation, when we are talking about the support from the banking industry, I think the primary support has to come to ensure the survival, thereafter the revival. And when you talk of that, I very strongly believe that each and every enterprise should be judged from a perspective that how the enterprise can be made performing. I very strongly believe that if the enterprise is not performing, it's a colossal waste for the national wealth, because it is killing the opportunity of employment, it is killing the opportunity of wealth creation, and thus enterprise to be helped is a necessity. But I always say that credit is one part of the whole story. Yes, credit is a must, but then are we creating a proper environment, the ecosystem which supports the growth? And thus it is very, very essential that you should have a very positive environment and create the growth opportunities.
Thank you, sir. So ladies and gentlemen, just try to put the perspective. So what are the growth levers that banks can apply to drive the economic growth?
See, according to me, today, when you talk of growth levers, you should look at what are the sectors contributing to the GDP growth. So you have to look at the agriculture sector, you have to look at the MSME sector, you have to look at the industrial sector, the infrastructure, the services. And in all these sectors, to be very frank, today the banking penetration is so well that probably you can support each and every sector. But should you do only conventional things, or should you look at the innovative way of supporting each sector? Let's talk of an agriculture. Luckily, thanks that even today's report says that the agriculture will show 3 to 4% growth. And 1 lakh crore agri infra support has been declared by the government. I think the most important part, I have been a branch manager in the rural area in 1976, and I still feel that the real problems with us is that we have not created sufficient support of the end-to-end supply chains. When I say that, I will start from the disaggregated land holding. Effort should be done towards the aggregation of land holding, make the viable size of the land by through the FPOs or by creating the self-help groups or joint liability group, and get into farm mechanization, which can really improve the productivity. The irrigation still, despite so many years, you don't have the fully, your arable land, the irrigated arable land is hardly anything. We are still depending on the rain god. So I think that is one area that you will have to really look at the innovative way to do the things. When I say so, I very strongly recommend 2-3 areas. See, today on a pre-harvest, we are lending around 12 to 13 lakh crore, but when you come to the post-harvest, there is hardly any engagement. Maybe we have not been able to really leverage on the warehouse financing properly. The farmers are required to probably sell their produce at distress because they have to adjust the first crop loan to avail the second crop loan. And thus, there is enough opportunity that if you create sufficient supply chain for the agriculture farm produce, a lot of reforms have already taken place. I think that is one area where you can do a good job by supporting and pushing the credit growth. MSMEs, in any case, I think with all the support of Atmanirbhar Bharat, stimulus being given, the restructuring being made available, I think the banking industry is supporting. The numbers are very clear. But then, yes, here again, I again repeat that there are very few MSMEs who are having a direct produce marketable in the market. Most of the MSMEs are the intermediaries or could be the ancillaries. Now, they all depend on their OEMs or the supply chain who are consuming their product. And thus, I think there is a great necessity not only for bankers but the ecosystem to look at how can you push the complete pipeline. If the pipeline of auto sector gets pushed, obviously, luckily, I think that is one area which looks to be doing well. Similarly, the real estate. I mean, some of those things you'll have to really look at, that how can you really support the MSME sector, not only by pushing credit, by making sure that the complete chain, right from procurement to the consumption of the end produce, is really taken care of. And then comes, I think, once you are doing this, the large manufacturing and infrastructure projects. Here, KK, I would like to say that there is a great necessity to examine each and every project or an industry which is not performing. Because if you don't make these projects or these industries performing, again, it is a waste of the investment and national wealth. Now, what are those reasons? How can it be supported? All that has to be examined. It can probably give a good opportunity to push a good credit, create employment, and support the economy. And in any case, infrastructure is something, again, let me tell you, I would remind people that the infrastructure growth has happened during a time when there was a global meltdown in 2008, but the Indian economy was resilient. We were having all targets to grow at a double digit from 8% to 10%. Everybody believes that India was deficient in the infrastructure, and I think huge financing happened in those. But then the problem started. They're visible in 2012 itself, and there was a project management group which was created by the government of India under the cabinet secretary to make sure that each and every project is made performing and productive. I think we'll have to look at how many of those are still languishing and support that. Once that happens, because see, one is these are all short-term measures which you can immediately see. Then you should switch over to the medium term and long term, where I will say that the government through the various surveys, the various policies should come out that what are the capacities need to be created in what sector, and accordingly probably the project should be really looked at. I always believe that if the projects are done on PPP, there is always a commitment available from the government. There is a credibility attached. You can get the investments and all those things. I think these are the way the banks can push it. but supported by the whole ecosystem.
So you said the second point is talked about the MSME, and
Yeah.
also the first one talked about the agri. So let's talk about the informal sector. So like our Nobel Prize winner Muhammad Yunus said, the informal sector is the powerhouse of the economy, and basically it has perhaps two sections to it. One, the wage earners, and then the small traders. Okay, from your experience, tell us how banking innovation can enable transformation of the micro entrepreneur sector into the creative hub of the economy. How can this sector come into the main hub of the economy?
So I strongly endorse what Mohammad Yunus has said. And it is true that probably the economy needs to be pushed from the rural and the semi-urban sector, the informal sectors, where you have to create huge employment opportunities by really looking at the various sectors. So what are those various sectors that you can really look at is, as I said, the agriculture part is one, where now this 1 lakh crore support which government has declared through the financial guarantee to the interest subvention to I think through the engagement of the farm produce organizations, we should really look at that how more and more activities can be created to create the engagement at that level. And I will only request one thing, that in these areas, let us not look at the banks in isolation. You have the complement of the NBFCs, you have the complement of MFIs, who are all supported again by the banking industry. I never feel that the NBFCs and MFIs are the substitution to the banks. No, they are the complements and supplemental organizations
Yeah.
to the banks. And thus, what we have to see, that what best employment opportunities can be created, one in the agriculture sector. As I said, that if you can really bring in certain innovations there, by trying to see that you do a good water management, you improve the irrigation part, you do the collective farming through the land aggregation. I think that lot many activities can be pushed there. Besides that, I very strongly feel that in the rural areas, particularly after launch of the Swachh Bharat mission, there is a huge opportunity to drive the sanitation activities on the waste management, the sludge managements, and all those activities. Besides that, I think the solar is also another. So if you want to really address in that area, you will have to look at these new things in addition to what we are already doing. So what if these things are taken care of, it will definitely push. Coming to the small traders, let me tell you, as a banker, today you must appreciate that the banking industry has got almost 130,000, that is 1,30,000 plus banks branches, but they are all supported by almost 3 lakh business correspondents who are reaching to the last mile. Besides that, lot many technology initiatives have been taken by the banks to make sure that they reach to the farmers, they reach to the last mile and offer the banking services through a digital mechanism using the banking correspondence as a tool. And thus, I don't think that reach as a problem today. The problem is creating a good opportunities, and those opportunities can be created only by generating new way of doing the things. And that is what is my take on the small traders. Let me tell you, if now the present COVID scenario, lot many labors have gone back. We are not sure that 100% will come back. I'm not sure it will not come back. It means good amount of labor is going to stay back in the rural areas. Now you'll have to create enough business opportunity for these people to get engaged, and those business opportunities banks can support. Let me tell you, I will remind the banker that we are the banker who have lent the money under differential rate of interest at 4% in early or late 70s to push the entrepreneurs like cobblers, the gold, the smith work, I mean, all those small things, 2,500 was the ticket size which you lent. So bankers are well experienced. The only thing, the kind of a opportunity, because all said and done, bankers have to ensure that the money comes back. The entrepreneur is able to generate a sufficient cash flow to pay back the money. If that is ensured, I think this is possible. And on MSMEs, I got one more thing to suggest. We have we drive various conceptual things, but I don't think that it goes to the logical conclusions in really creative. Now let's talk of the clusters which were created for the MSME growth. I'll give an example of the Moradabad. I'll give an example of Bhadoi. They were the cluster for the specific areas. Bhadoi was for the carpets. Carpet exports were happening from the Moradabad for all metal work and all that. But then we have not been able to really, uh, uh, push those activities whereby we have done so much on skill development in all these areas. But then we have not been able to really increase the productivity there, and that was all possible when you are supporting them by giving the proper procurement of the raw material at the right price, provide them all facilities to produce, and support them in disposal of their produce and realize the money. I think we'll have to look at the MSME support in a very holistic way and not simple bank credit as one part of the story.
Yeah. So do you suggest that we should look at sectoral and see where is the, what each sector wants? For example, if you were to look at, say, Tirupur right now, many of these sectors which are the hub of government export is on a closure. So I think we need to look at them specifically and say, what do they really want? How can I help them? Or if you look at the leather industries in Jalandhar, what they're also shut down. What do they really require? I think if you look at sectorally, perhaps that's what I think.
You have rightly identified, because I had an opportunity to visit Tirupur a couple of times, because it was a great hub for the government exports, particularly the knits. Now, what happens that over the period, when the markets are changing globally, one is that you will have to change your capacities to support the global markets. Not only support in terms of what they want, but match the price, match the quality. So I remember that during my first visit to USA in early 90s, it was all made in India. And subsequent visits in 2000 onwards are all made in China. Somewhere that competition in price and quality kills our industry. And thus I think there is a great need that the price and quality is really supported by the government, by the bankers, the creating capacities among the entrepreneurs. If that happens, I very strongly feel that a very good concept of the 100 smart cities be conceptualized. And each of these smart cities, we thought that will create great industrial clusters and specific sectors will be developed. I think those are the things which one has to look at in depth and push it. I'm very sure the bankers will be absolutely willing to come forward to support all these initiatives, whether it is Tirupur or whether it is leather industry. You're talking about Jalandhar, I'm talking of Dharavi, Mumbai. Dharavi, Mumbai was a great hub for a leather industry, and we have walked through the lanes of the Dharavi and lending the money to the Dharavi leather exporters. So it's a matter of creating a good ecosystem. I'm very confident that will help in growth and creating the credit expansion.
Right, sir. So, ladies and gentlemen, we really interestingly enjoying this discussion that we're having as to how banks can revive the economic sector. Meanwhile, you can, if you have queries, please put it into the Q&A box, ask those queries, and I will take your questions across to Mr. Tanksale. If you want to ask a question directly, you can do that also, but it's up to the guest to decide what he wants to answer and what he doesn't want to answer. Given these two things, I look forward to your queries coming quickly. So let me ask the next question to Mr. Tanksale. Sir, the chief economic advisor to the government of India, that is Krishnamurthy Subramaniam, had said, banking sector is marred with both scale and quality problems. When we try to achieve scale, we do not end up lending the right way because the banking sector also has the problem of allocating capital to good quality projects. So, what are your recommendations or thoughts on how banks can improve capital allocation to the growth oriented projects? Some of them we discussed just now about Tirupur and Jalandhar. Any other thoughts you have on that?
Let me slightly track back, and I respect. It is not answering back to the observation, but then it's very essential for all of us to know. I'll again take 2 minutes to tell you all that way back in early 2000, the credit deposit ratio of the banking industry used to be 50%. And it was the same situation that the money was getting parked with the Reserve Bank of India, and the banks were being called the lazy bankers and laggards. And thereon, when the positive reforms started coming into that industry from 2007 onwards, let me tell you that the banking industry was flush with funds. The lowest deposit rate was highest deposit was 6%, and the basic lending rate was 8%. And that was a time when, as I said, the government identified the various areas for lending, and probably that was a time nobody could have said that you don't need to create these capacities, whether it is a power sector, whether it is a road sector, whether it is a what do you call ports, or the various metal industries. And every industry was looking at, wow, this is a great opportunity. And it was all evident because you are getting huge imports coming from the neighboring country, from all this, particularly steel. Everybody started working on backward forward linkages, that this is how I can reduce the cost, because we are all part of a global village. And here, let me tell you that any kind of a control mechanism will not work for a long. And thus, the markets will have to be the market driven, means the price and quality will have to be really looked at. Having said that, the credit creation got into being in 2009 to 2011-12. The credit growth used to be 20% plus in all those 3 years. And the projects were conceived on certain assumptions that if these assumptions supported by the government and the ecosystem go well, the projects will be completed in the given time and will start performing and producing. I think I did make a reference of the project management group, and I remember the then FM and the bankers did the roadshows across the country discussing all the promoters that let me know what are your problems. We will resolve your problems to see that your projects are rolled out. Because it's very essential, irrespective of the promoter, the project gets performed. Having said that, probably we could not address the issues correctly, huge cost overrun, huge time overrun, and to add to the problem, definitely the misgovernance was there among the promoters. Well, bankers can be blamed for probably not being able to monitor, but then it doesn't happen. It is not a plain vanilla transaction where you are able to spot that something is wrong. All of us know that why a forensic is required to see all that. Having said that, since I was a part of the complete restructuring initiatives in the banking industry right from early 2014, your 525, your S4, and whatever new schemes have come, everywhere there was a realization that probably these assumptions, had they gone right, probably our capital allocation and our lending would have been absolutely right. So saying that the lending was wrong and it is only lending which is wrong probably is incorrect. What is correct is that probably we have not been able to make sure that holistically your projects are really supported to get into production, get into rollover at the good time. 80% of the road is complete, 20% is stuck for environment for years together. Hydel dams are created, stuck for the rehabilitation. A number of such instances I can quote. But having said that, I think banking industry have supported all those projects which could have been really revived, survived, and probably now we have learned the lessons. The two things which I very strongly feel, that one is that the structure of financing itself has to undergo little change. There was heavy dependence on the bank borrowing and the equity. There was hardly any debt component or the external investments coming into it. And thus, I very strongly feel that wherever these are the country proposals or the beneficial to the at large, the PPP model should be brought in, where there should be commitment of all the ecosystem and try to get the funds through the debt structure, so that the heavy dependence on the bank also gets reduced and banks also gets into the proper monitoring. Having said that, I'll also suggest the banks to get into a different mode of monitoring, which is now available through data analytics. Huge data is available. You got a data like the credit bureaus who are coming to the analysis. You got the complete MCA data, GST data. You got the law firms. I mean, a number of pointers are there through which you can do your due diligences, your credit monitoring, and there is a great necessity that your engagement will have to be through the life cycle as a part of the project and not only as a lender. That is what is my take. Okay. And with this, right, the capital allocation will go right. Absolutely.
Okay. Right, sir. So, like I said, the participants have a choice to enter, put a question in the Q&A box, or ask a question directly to you. So the first question I have coming to you from a very, regular fan, a regular participant in the show, Mr. Chittaranjan Chattopadhyay. He is asking a question to you, sir. Will independent evaluation committee concept, once brought in the system during CDR regime, be relevant in the one-time restructuring opportunity for the corporates and even to the MSME big buckets? MSME big tickets, sorry. MSME big tickets, not buckets, yeah.
Thanks, Chittaranjan. And KK, as you know, I am FCMA also. I am a fellow of the institute where Chittaranjan is the president of the Banking and Insurance Committee. So independent evaluation committee concept was brought in 2014, when it was felt that what was happening, that most of the projects were syndicated by the large names. I will not like to take the names. And the same entities are coming with the restructuring projects. All of us know that the complete syndication has happened through 4 or 5 major players in the system. And those players are well experienced, entrenched in the project lending. So there was nothing wrong with that. But then it was felt that since the same people are coming forward for supporting the restructuring projects, there is a great necessity to do the independent evaluation over and above what the banks are going to do the appraisal. And thus, I very strongly feel that since it was instituted during my time in the IBA, this is a very good concept. Yes, you should have it evaluated by the independent evaluation committee. If it happens, it increases the confidence of the lender. It increases the confidence of the promoter also, because ultimately promoter is also putting in money. Somebody else is also chipping in the investments. So it adds to the credibility of the project report which has been submitted by the consultants.
Excellent, sir. Thank you, Mr. Chattopadhyay, for a good question. Mr. Sudarshan Nair, since your query, I see a merit in easing lending of small industry sectors involved in COVID recovery, like those producing PPE kits, sanitary towels, etc. Is there any thought, sanitary tunnels? Okay, the tunnels that came up. I'm so sorry. So sanitary tunnels. Is there any thoughts in this direction, centrally or amongst bankers? Will this have a ripple effect on functioning of many dependent sectors?
Well, I really don't know whether any specific focus is on these activities, but These are the activities which are the necessities in today's time. And these are the activities which are clearly seeing the financial viability and the feasibility. And thus, I think any banker, what he looks at it only the feasibility and the viability. And I don't see a reason. But then if there is a collective effort, you feel that the MSMEs are there and would like to come out collectively to seek the attention of the banking industry, I'll suggest nothing wrong if you write to the Indian Bank Association, because this is an effort which is really supporting addressing the COVID issues, and thus banks will love to come forward.
Okay, thank you, Mr. Nair. So there's one audio question coming directly to you. This comes from all the way from Chennai to you. Mr. Tyagaraj would like to ask a question to you, sir.
Hey, good afternoon, sir. It's a pleasure to see you on our platform, and nice to see you, sir, in action. Sir, my quick question. Yes, sir. Thank you, sir. Sir, being you are thick and thin of things in the DBT platform, banks DBT platform, enabling a robust payments for the government subsidies. The National Mission on Financial Inclusion led to the Guinness record of opening Jandan accounts, which led to Jandan Rupee cards to Jan Suraksha. So I would like to hear from you, sir, being steering of the IBA as a chief executive. What is your views on banks' role on creating a robust platform for disbursements of DBT in this COVID times, which has proven it is scalable and robust? Your thoughts and views on this?
I think, Tyagarajan, that already the AEPS platform is available, and 100% DBT in the country is getting distributed only through that platform. So, because I was a part of the entire Pradhan Mantri Jan Dhan Yojana drive, including making best use of the opportunity where the initial was opening up account, giving overdrafts, alluring people to come forward. And when we were seeing that the DBT is the right thing to route it through the AEPS, I think AEPS is fully supporting because all these accounts are Aadhaar enabled, and the payment system is supporting. So if you are saying that on the same lines, credit disbursements or any other thing should also happen to the platform, yes, I very strongly feel that the technology initiatives will help in the quicker credit disbursements and reaching to the borrowers quickly.
Yes, sir.
Yes, if that's the intent.
So overdraft facility can be, yes, sir. Overdraft facility can be provided. Yes.
I will tell you that incidentally, I had an opportunity to mentor PSB 59 minutes in its original chip of Capita World. And today I'm very happy that this platform bit got created, and the whole idea when people approached me, I said, I don't need a plain vanilla platform just to do the loaning automation. I want the process in between. And thus the whole process of the KYC, the whole process of credit bureau check, the assessments, the various other information check has been built into it. And I'm very happy that what was thought of only a retail product, State Bank is using for 5 crore kind of a lending. So technological initiatives, banks are absolutely on to take on wherever you want us to give. The only thing that what is lacking in our whole system, and I'll again tell you, you might be recollecting if I had said that, there is a great need for us to create a digital literacy among the user group. Sure. We all talk of financial literacy, but we never talk of really working for digital literacy. And KK, you were part of the game when we were together in PNB, that financial institution. I think unless the people know about how to use the technology for my benefit, it really doesn't get the traction as much as it should.
Thank you, sir. Thank you, sir.
Thank you, Tyag. Thank you for a very good question. Sir, so given that the questions you answered, so what are your recommendations on how banks can improve capital allocation for the growth-oriented projects?
See, I said about the capital allocation, what we have to see that primarily I must see at my all existing exposures, what kind of support they need, not only to survive, but to revive and to next to grow. That should be my primary objective. Because if I say that, oh, I want to look at the new areas first, no. My first objective should be that I make sure that wherever I invested, can that be survived, revived, and can be supported for growth. So my first capital allocation really should go towards that. The second part, thanks to the forbearance on the restructuring, although various riders are there and bankers are again going back to the regulators on those riders, that's a different thing. But then I think restructuring is a must. Let me take you back to the 2008-9 again, when I made a reference of the global meltdown and India economy being resilient. The whole reason was there was a mandatory restructuring happened in 2008 and 2009, which was over in March 9, but extended for June 2009. The only thing, there are always black shapes who make misuse of the opportunity. I only request that at this point of time, most important is that the bankers should be given the full liberty to judge what is right and what is wrong. Let them use their risk prudence, let them use their risk cautiousness correctly. And I'm very sure that the bankers will come forward to support, do the structuring, deep restructuring. I will say that even if it is at the cost of losing the asset quality and making provision, do not hesitate to do deep restructuring, provided there is a clear visibility of its revival. Because instead of losing and having a cut of 40%, 50%, 80%, I mean, you can't sleep if you have got 80% cut in the IBCs. So instead, I will say that let's see that how can you, that is my first area. The second area is, I think, very, very essential that the buck doesn't stop here. You have to look at which are going to be the sunrise sectors, which are going to be the areas which are going to support the growth in the medium and long term. And yes, there is a clear-cut opportunity when you look at the industries moving out from the neighboring country. Can I create a real good environment to invite the manufacturers on the electronics, the digital, the tech, pharma, and I mean, which sectors are going to be the growth sectors or are likely to move out? Let us support that. I think that is another allocation that we should really do. And the third is, of course, I will say that all said and done, that infrastructure part, wherever you feel that, but then the only request is that every infrastructure which you create, you must have a proper model for realizing the, I mean, you'll have to price the services and get the realization. There where, let me tell you, our systems are not very, very comfortable. I'm sorry to say that. But then if those things are there, every project can be made viable if the pricing of services is allowed to be done properly and service properly.
Okay. So I have a query to you from Mr. Prabhakar Kaza. Mr. Kaza is from London. He was the ex-CEO of SBI London. So good morning and welcome to the show, Mr. Kaza. So his question to you is that if the issue is quality of corporate lending, I think it can be improved by 1, frequent inspections to the factories. 2nd, meeting with executives at different levels. Bankers nowadays seem to depend only on annual financials, MIS, and audited certificates. Your thoughts, sir?
Prabhakar, I totally endorse what you said because I strongly believed in it. That unless you have met the promoters, unless you have met the people who are driving the business, and that's what I said in my earlier, I'm not a lender. I'm a partner with 75% stakes. And thus I must behave like a partner and I must understand that what are the things which are happening. Because reading the papers and doing a table decision based on the information which is well structured to everybody knows what pleases bank and what fits into the parameters of the bank. So getting a very fit proposal fitting into parameters is absolutely should be seen with the, I will say, with the caution. If it is too good to be believed, I totally with Prabhakar. I think the today's bankers probably will have to increase their engagement with the promoters. The frequent visits are must. to the industrial site so that you get to know the realities, have a round of the factory, have the chat right from labor to the executive level. It gives you a lot of feel. Let me tell you, that was the banking which we have learned and have practiced.
Right, sir. So, we are hearing from a very, very experienced banker. So I think that's got a lot of
I will
quality
only add, KK, one thing that
Yes.
do not hesitate to use the information which is available to you through the data scientist. Various data analytics are available. The bureaus are providing the information. You see the small information on reconstitution of boards, auditors leaving, non-filing of GST, not paying APF, and these are small things. These are the early warning signal. Something is wrong. Now, what happens that these early warning signals, we just take it and okay, it is not okay. These are the signals which tells you that something is wrong somewhere. And I am a banker who totally believe that if you don't identify a cancer at the beginning, at the first stage, you can't cure it. Then you have to only operate it. So better get into the cure, identify the problems at the first stage, and address it. So I totally go with it.
So let's look at from domestic consumption and look at exports. How should banks gear up to capitalize on the disruption in global supply chain and government push for exports-oriented economic policy?
Well, I will like to again take you back to 1991. I'm sure everybody knows that that was a time that country had a almost negligible trade balance, and with the liberalization, privatization, globalization, the entire support came from the banking industry in terms of raising the supports, getting supported funds. And today I'm so happy when I see that the reserves with the government is $500 billion. If that's the case, I know we have supported PSCFC, we have support. So bankers will have to look at again 2-3 things very carefully. One is that you must be part of whatever the economic measures which government of India is taking to support the exports. I'm very happy that these are basically manufacturing commitment they are seeking, and then the supports are going, and it's not pure interest subvention that you do this and have a subvention. So those supports which are coming from the government are very good. I totally appreciate, and banks must support it. In order to support it, I think the banks will have to again get into 2-3 things very carefully. That your due diligence, one, on your own borrower, your due diligence on the counterparties of your borrower. That's most important in the export business. Unless you have a good information on your customers, counterparty customers of your borrower. Rather, I will say a third stage, his customers, KYCC. It's not only the KYC on the, it is KYCC. And then the country risk. But with that, you have to make sure that you are in the competition where quality and price, these two things are the drivers. And if you are able to compete with the quality and price and are very right in your due diligences, then definitely you must do the risk mitigation by the credit insurance. You must do the risk mitigation by, I will say, the exchange hedging, because we are all in the VUCA. It is all volatility, uncertainty, complexity, and ambiguity area. So having been in that time, I think nobody should keep it open. I remember in my days in the late 90s, the importers will probably hedge it, but exporters will keep it open or be rupee or depreciate over. So that kind of a situation does not work. The bank should help, but make sure that there are no hiccups of this type.
Okay, let's take the next question from a very experienced banker, Harish Prabhu. Harish, can you unmute and ask?
Yeah, good afternoon, Mr. Tanksale.
Good afternoon.
In the 80s, see the 80s or early 90s, the SME sector was fairly vibrant, obviously meeting the domestic demands, right? And the banks were stepping up to really meet them. And I've seen in, let's say, Mumbai also, Goregaon East, etc., used to have so many, industrial galas, and they had exports, domestic, etc. But now that the imperatives over the last 30 years, our manufacturing base has sort of eroded, right, at the MSME. And now when we are trying to say that we are going to harness the export oriented growth, now the entire manufacturing 4.0 plus the fact that you require to be competitive. If you have to be export oriented and competitive, then you have to have a cluster based sort of ecosystem, right? So today what I see is that fine, we are all okay to talk about export oriented growth unless and until the cluster based development is not undertaken, then the efficiencies won't come in. I know for a fact that one the electronics manufacturer, he's in Shirwald and he gets his PCBs from Pune or Bangalore, then he gets his screw from somewhere else. So, I mean, is there the government thinking, on these lines? And obviously, from a banking perspective, the cluster-based approach would ensure that, there's a specialized banking activity, right? I remember that SBI, right, used to have a leather branch in Chennai, only focused on leather exports. So has that banking sort of, it's very relevant for today's export oriented MSME push. Where is the banking ecosystem today in that regard?
See, I totally agree with you, Prabhu, that the cluster system really supports, and you rightly identified the areas. And that's what I have been saying in my previous answers, that for MSME, unless you are supporting the MSME through the life cycle, and the life cycle support can come only when the clusters are created. I remember the days when I was a branch manager and there was a concept of the district industry center way back in 80s. I was incidentally part of the KB Kamath committee on the creating infrastructure for MSMEs, which came out with the Udyog Aadhaar and all that. And our whole recommendation is that create a very compact cluster mechanism, and I very strongly feel that this 100 smart cities is the right approach. Wherever you have gone through the cluster, you will see when you talk of export, all your export processing zones were a cluster. And when they're like in Mumbai SIPs, we all supported because everything was available at one go, right from the clearances to everything, and the things were easy. So on the same lines, if you are identifying which part, which export component you want to support, and what is it. Now let's talk of the food grains. I think that is one area where, but I don't think there is anything which is being done in an organized way. Is going Cargills of the world, and they will all big people will come. They'll do their own businesses and go off. Where is the coordinated effort that the farmers are put together by the Farmers Produce Organization, and they are into the exports of the produce from different pockets, and that's possible. So cluster approach is a must. With regard to the banks are concerned, I very strongly feel that banks must go back to the strength of the lead district concept, where each district is at the hands of the district level consultative committee, where the administration is a part of a story, NABARD is a part of story, bankers are a part of a story, and we used to create the district credit plan. I'm sure that must be existing, but as I said, unless you convert concepts into reality, and I think if you want to support the MSME sector, you don't talk of the country as a whole, you talk of my district, my state. So if you are working on those lines, I am very sure, and I'll request the bankers that you all are having the strength of being a lead bank in your district. You all have a strength of the state level bankers. You can drive the things collectively, but identify the effort and the opportunities and drive it. Should be.
So, sir, we don't need to reinvent anything. I think we already have.
I don't think we need to see everything is in existence. The only thing that it has to be slightly rebranded, and the utility of that, it should not be tick box compliance to have a DLCC meetings.
Okay.
I'm sure you are a banker of my time, where the block level consultative committee, district level consultative committee, all this used to be very effective because that was the growth time. But what happens, everybody has grown, and I don't know whether these committees are really looking at creating a cluster. Now, I give an example of Moradabad. I know that I have extensively worked as a executive director PNB in Moradabad, supporting the clusters, visited personally. But then what happens that unless you are creating end-to-end support, you are not really supporting the MSMEs to come through their life cycle. And then you are starting looking at the problems.
Thank you very much, sir. Sorry.
Yeah.
Thank you. So let's look at technology. And one of the things that was created was the fintech for PSBs called the Public Sector Banking Network, PSBN. Can you update what are the PSBs doing at operationalizing the PSBN aimed at enhancing technological capability to drive growth?
KK, let me admit honestly that I heard about it only through you guys yesterday. Tried to do my research, interacted with the bankers, including IBA. I don't think there is anything significant which is happening around the so-called fintech hub for PSB network. Having said that, let me tell you that the public sector banks are at par with creating their technological capability with any other players in the system. Yeah. It is not that the public sector banking is limited to core banking to do the only accounting and MIS part. I think every bank worth its salt is looking at how can I really engage and collaborate with the fintechs of the world. Not only fintechs, there are insurtechs, there are regtechs, there are agritechs. There are so many startups who are coming, and banks are welcoming to see that, because banks look at this collaborative effort where through this they can really improve their cost efficiency, their reach efficiency, operational efficiency, delivery time, and everything. And irrespective of the PSBN, where I have not come across a collective effort. But having said that, I must say that State Bank of India, Bank of Baroda, they have done extensive work in creating the verticals on the startups and inviting startups to come forward. Likewise, Union Bank, PNB, Canara Bank, all big names. Let me tell you, everybody is engaging with one or the other startup. Why I'm saying so? Because I'm personally engaged with the Swift India, as you rightly said, where we are working on the trade digitization. I am working with few data science companies. I was part of the PSB 59 minutes as a mentor advisor to the Capita World. So various initiatives have already been taken to make sure that the PSBs leverage the technology to its hilt and not use technology only from that perspective. And that is why last 6 months, COVID, how the banks are able to give the relentless services is because of the technology. Yeah. The kind of infrastructure which you have created with the help of NPCI, with the help of FTAs, using the SFMS for the interbank trade opening LCs, and now which is getting enhanced with the Swift India digitization effort through automated e-stamping, trying to convert the e-way bill into a transport document. There are, let me tell you that come 12 months, the end-to-end trade digitization will be available digitally. And that those efforts are already on. NESL is doing its own efforts as a information utility under IBC. They have embarked on the digital documentation with the banking industry. Stockholding Corporation is supporting in all automation of the stamping. So various efforts are happening. I have read through the document, but I have not come across whether any collective effort is on. Having said that, let me tell you, banks are absolutely open to collaborate and look at the opportunities to work with the fintechs of the world, support the startups, and make the best use of this.
Okay. So I have a question to you from Devendra. He says that you said, sir, the MFI and NBFCs are complementary to the banks, and not something that NBFCs have to be kept aside, because they happen to be the backbone of the rural economy. Do you see that that banks and NBFCs are having a traction? Should we have a kind of a benchmarking on bank to say, what have you done with NBFCs? What kind of lending have you done with NBFCs? Some such things have to be measured.
Primarily, we have to understand how the NBFCs started thriving. Because NBFCs identified the areas where the reach and access was difficult, one, identified the borrowers where structured information was not available, and they developed the capability to convert the unstructured information into a measurable information for credit decisions. And that's how they started really growing. And today, if at all any borrower is paying a much higher rate to the NBFCs over the bank, there has to be some reason for that. And ultimately, when you look at the NBFC size, what is the total contribution of the bank's lending? Humongous. Can the NBFCs really generate the funds without banks and operate by themselves? I doubt. But the space being such, the other day in one of the conference, it was very clearly articulated that still the financial services, there is a gap in demand and supply. Supply is yet to be augmented. I incidentally am a part of one of the corporate business correspondents who are supporting the MFI growth for the banking industry. And I find a huge opportunity because I'm very confident that the bankers cannot reach everywhere. And that is why the co-lending has come into being. Why the co-lending has come into being? Forget about the assignment of the assets. That was one area to leverage the funds by the NBFCs and the banks to create the credit. But the co-lending is something which is, as you said, benchmarking. Co-lending is something where the NBFCs, HFCs can go together with the banks and both can leverage on each other's strengths. So I think that is why I used the word that in the financial world, this should be seen as complementary and supplementary. And let me tell you that as the borrowers will get more and more informed, the rate differential between the MFIs, NBFCs and banks is huge. You mean to say that people will still prefer to pay high? I don't think. And thus somewhere this gap will definitely get reduced if the bankers are able to improve their reach digitally and are able to deliver to the last mile by themselves. If not, use the tools.
Yeah, very well, sir. Thank you. Thank you for a good question, Devendra. So my final question to you is, what are the major hurdles that are impeding the banking sector's contribution to economic growth, and what measures do you advocate to dismantle the hurdles for the smooth economic recovery and growth?
So as a banker and being active in the whole system, I very strongly believe that we are the bankers of the time when trust and confidence was the major driver for the financial growth. And the most important part today, what is lacking is a trust and confidence. And thus the primary thing to push is create sufficient trust and confidence in the whole system. Stop bashing left, right, and center for creating the perceptions. I think that's not the way the trust and confidence can be built. The trust and confidence can be built by showcasing that we appreciate, and we appreciate for the right cause. Don't say call spade a spade. Absolutely no issues. But then create an environment of trust, confidence, and appreciation. If that happens, with that you will have to really look at. To be very frank, today what has happened with, particularly about the public sector bank. In public sector bank, although all of us have heavily worked on capacity building of our own people, but what happens that I don't know, the human resource, initially we used to call it personnel department. Then we started calling it human resource development department. That was in 90s, if I'm not wrong. And with this, I think the capacity building is one area where banks and the whole system has to invest heavily. Probably in terms of time, in terms of money, in terms of knowledge, in terms of wherewithal. Because I very strongly believe that unless you create a strong enablers for the performers to perform, how do you demand a performance? And thus the enablers can be created by good capacity building, by proper investing in training, technological tools, technological support. And if all that happens, I'm very sure that it can follow by objective performance management, incentivization over the normal salary compensation for the good performance. There has to be a differentiation between a good performer and a weak performer. I don't say that you have a hire and fire policy. I'm not suggesting that. But then, yes, you have to have a policy to notify a guy you are not performing and you'll have to improve, otherwise you don't survive. And that kind of a situation has got to come within the bank. With this, if the banks are adequately capitalized, let me tell you, KK, I am a banker of a day, and I'm telling you, not very late, 2009 to 2011, I have been going for various global investment conference, and every investor worth his salt used to tell, Mr. Tanksale, we are absolutely fine with your efficiency ratios, your productivity ratios. Those days, my all ratios were fantastic. I mean, the return on asset was 1.5, the return on equity was fabulous, CASA, NIM, everything was great. And they used to say, sir, only thing we want you to increase the FII participation from 20% to 40%. But unfortunately, situations have changed, and it is said that the bad assets get created in good times. It happened, but then that's not the end of it. You'll have to address it very positively, come out of this problem, which is possible according to me, but address it rightly and try to move forward. If that happens, the last but not the least is really creating a capability in the boards of the bank, which can really give the able guidance to the, having said that, it doesn't mean the previous boards were not. But then today you need in the board the specialists from the different areas. And we definitely didn't have everything what we wanted. And today when after the PJ Naik committee, I think a lot many initiatives have been taken, but still I think the boards, if they get a real support from the specialists, from the markets, from the various domain and disciplines, I think they can strengthen the whole execution, because conceptualization is one part, but driving the execution and implementation to meet the expectation is the real crux of the game. If that is done, I think the banks, all these hurdles, what you say, hurdles are no hurdles. We have gone through the cycles, and we have shown the resilience to come out of every cycle.
Absolutely. So we have come to the end of our session. It's already 10 minutes past the 4 o'clock mark. Thank you very much, sir. So ladies and gentlemen, just to summarize, I think we had a great discussion with Mr. Tanksale. Key takeaways are that he talked about SRGs, survive, revive, growth. I think this is a mantra that that has to be there with the bankers. And it said that credit is only one side. You should look at post-harvesting lending. Why no lending is happening? MSME sector support, infrastructure projects. And he talked about banks should be given the right trust and confidence, appreciate where required, tech support, very, very important. Incentivization of staff for doing good job, be it salary or whatever else, and creating the right capability in the board to give directions to the banks. I think these are some of the levers that I talked about, which will drive the economic growth of the country. All excellent inputs.
Sanitation you must include. That is one area where hardly anything has happened. And there are good number of success stories like Indore Municipal Authority. See, all of us have worked on the Jawaharlal Nehru Urban Mission. And that was the time when we have supported the sanitation activities. The municipal corporations used to be credit rated, and the municipal bonds were supported. So you will have to go in for the innovative way of raising the funds. I think that is one part which I said, that the structure of lending, which was heavily dependent on the banking, will have to be tilted by inviting the innovative lending, innovative investments which are available through social impacts, green bonds, sanitation bonds, climate bonds, so on and so forth. I think those are the areas. So sanitation and renewable is one area where you can do a lot and lot to be done.
Okay, sir. Thank you. Thank you very much, sir, for spending your time with us. It's more than an hour you spent with us. Excellent input, sir. And I hope the participants have enjoyed this discussion as much as we have done with you. Ladies and gentlemen, please join me in thanking profusely Mr. Mohan Tanksale for coming here and talking to us about the economic revival through the banks. Thank you very much, sir.
Thanks, and I request all participants to receive my things in a very positive way. And I'm very confident that going forward, we can really come back to what we would like to be.
Sure, sir. Ladies and gentlemen, before I wind up, let me remind you, tomorrow we have Miss Lata talking to us on transforming banking for 5 trillion economy. Tomorrow, September 1, the show starts at 6 p.m., not at 3 p.m. Please note that from tomorrow onwards, our show will start from 6 p.m. And so that to enable the current change in the pattern of people also started working from offices, so they are able to catch up with our shows. Thank you very much. Have a good evening to all of you, and have a good evening for the rest of the day. Thank you very much. Bye-bye.
Thanks, KK. Thanks, Tyagarajan.
Thank you.
Good.